Alright, now is the tax relief season. We're coming very close to the end of year, and some of you are very kanchong already. Like, what should you top up to reduce your taxable income? CPF or SRS? How to choose? Of course, if you want the best of both worlds, you do both. But that won't be the question of today, because if you have just limited funds, and what if you don't need that much tax relief? Maybe you are hitting the 80K cap, or maybe you just reduce it by a few thousands will do. Okay, then that's where we have to answer this question, whether it is more important to top up your CPF or contribute to your SRS for tax relief of 2025. And if you have further questions, then feel free to join us at 22,000 members in the Honey Money SG Telegram group. But let's start with my first option, which is CPF first. Okay, so for myself, I started topping up CPF before SRS first. That was when I was still 25 or 26, okay, when I was still drawing not a very high pay. And the reason why I did that was really for tax relief reasons. Back then, wasn't so much into CPF. I was still building my CPF knowledge, but I understood the tax relief reason to do so. And the very attractive part about CPF is that you really don't need to think about what to do after contributing to it. Whether you do a retirement sum top up to your special account, RSTU, or voluntarily contribute to your MediSave account, VCMA, they both will give you 4% of interest per annum. And for those of you who are 55 and above, you can top up to your retirement account R rate, which is also giving you at least 4% per annum. So after you do the CPF top up, there's really no need to think already. It's guaranteed 4% from the CPF pot, and it's government guaranteed. So no way to run. Government want to give you this 4% already. Then what else you want to do, right? Just collect the passive interest every year. But the downside that everybody understands about CPF is that it is illiquid and it is locked up until you reach your retirement age of at least 55. Then you can withdraw the sums above the FRS, or when you have reached the age of 65, then you can withdraw as CPF life payouts. Other than that, before 55, you will never touch your CPF in SA. Okay, but for MA, you can use it to pay for insurance premiums lah. Okay, like your CareShield Life premiums, or your private integrated shield plans, or your MediShield Life premiums. All these can be deducted from your MA. And that's why when people top up their CPF accounts, many of them choose MA first, because there's utility. You can use it to pay for all these insurance premiums, which is mandatory once you have reached a certain gauge, depending on whether it's CareShield Life or MediShield Life. But for those who prefer to do RSTU, retirement sum top up to the SA first, it's because they prioritize the CPF life payout. So they want a higher payout, so they build a bigger retirement sum first, because after 55, your SA is going to be transferred to the retirement account. Okay, so it's going to build your retirement funds. After 55, no more SA. Okay, SA will be closed and transferred to the retirement account. So the game for topping up CPF is really very simple. You just put in money up to $8,000 per year for yourself, your own MA or your own SA, and you just let CPF do the compounding 4% every year. Okay, that is the passive income of interest coming from the CPF pot. Okay, it's a very simple thing. It's just a one-time kind of top up, and that's what I did when I was 25 or 26. And then I carry on when it makes sense. Of course, there's the limit of how much you can top up, especially when you hit the full retirement sum. You cannot do RSTU to your special account anymore. And when you reach the basic healthcare sum, you can only wait for the next year window BHS to increase on 1st January, then you can do VCMA again. But otherwise, if we are talking about tax relief limit, it's only 8K to yourself and 8K to your loved ones. So that's for CPF. Let's move on to the second portion, which is SRS. Who should go and consider contribute to SRS? Now, the thing about contributing to SRS for tax relief is that SRS acts like a bank account. So it's just a transfer of funds from your personal bank account to a SRS bank account, and that's considered an SRS contribution for tax relief already. But remember that this SRS bank account only gives you 0.05% per annum of interest. That is the base rate of the bank interest rate. And you realize that it's a very different number from 4% given from CPF versus 0.05% in SRS. So don't leave your SRS funds idle. That is the worst thing to do unless it's a very small amount. Okay, but if you contribute $1 to your SRS account today, you can lock in the retirement age at 63, which is very important because I believe from 2026, they are going to raise the retirement age to 64, somewhere in the mid of 2026. So whether you want to use SRS for tax relief or not, first, I highly recommend you just open the SRS account and put in $1 first to lock in the age. Whether you want to contribute later on is another problem, but you do this first so that you can lock in at earlier retirement age. So, like I said, 0.05% is very pathetic. And what you want to do with the 0.05%, you want to upgrade it, right? You want to upsize it. So, with that, you will need to increase your risk appetite, use this SRS to go and invest. What can you invest your SRS funds in? Number one, you can invest in low risk capital guarantee assets like T-bills, SSP. Okay, all these that can use SRS to invest, but it is quite low yield. I would say it's below 2% in the current low interest environment. And that may not even be worth it because if you're thinking of using your SRS to invest in T-bill or SSP, you might as well put in the CPF for 4%, right? If otherwise, there's no discussion on this one. If you already know how to invest, that's when you can capitalize on your SRS because you can use your SRS funds to purchase Singapore stocks or unit trust that tracks the global or US markets as well. So there's some sort of equity-based return. If you understand all these terms and market investing kind of stuff, right, SRS is for you. And having said that, I thought you can use CPF to invest. Yes, you can use CPF to invest, but only the CPF OA can invest. Your CPF SA, your CPF MA, and CPF RA all cannot be used for investments. And remember, you cannot just top up directly to your CPF OA, and there's no way to do it without tax relief. The only way to top up your OA is through voluntary housing refund or voluntary contribution to 3 accounts, but all these do not have tax relief, so they are out of scope. So you realize if you know how to invest, it's really better for you to go for SRS instead. And I'll use it for my own experience. So my experience back then as a 25-year-old kid was that I started with CPF first because that was after my first year of investing in equity markets. And I probably don't know what I'm doing, right? When I was so young and not exposed to the world yet. So I thought that at least I put in CPF, I get at 4% first until I learn how to invest better or there are better products that can track the global index funds. Then I will consider using SRS. But meanwhile, let's start with just CPF first. Let's focus on hitting the full retirement sum and the basic healthcare sum, whether in my MA or SA. Correct. So that was my top position. Top up the CPF first, then SRS later. And in fact, back then, 10 years ago, there wasn't much options for you to use your SRS to invest and at a low cost or low fee that is worth it. Otherwise, you're just paying all these financial institutions like ridiculous amounts of fees. Until like 5 years ago, when we have more brokerages and more robo-advisors, digital platforms, all offering their own version of SRS investments, then we start to see, you can use SRS to invest in this and invest in all these assets that are considered low fees and reasonable risk appetite with suitable market returns. In fact, in the year of 2025 right now, we have platforms like Endowers, which is what I previously used to invest my SRS 5 years ago. And then later, we had Pomians who offered a monthly funds for SRS investing that is available as well. So all these things only come much later. And the most recent one is StashAway ETF Explorer, where you can now even use SRS to invest in the UCITS fund like ISAC, which tracks the global index. So all these products and platforms are very recent developments, like in the past 5 years only. So if you ask me like 10 years back, if there were such products and such platforms, will I have contributed to my SRS? I would say yes, because it is much more palatable, it is much more low fees. But back then, 10 years ago, really don't have such thing. So I chose to top up my CPF first. And in the different era, 10 years later, right now, you may see that actually I prefer to top up SRS because I know how to invest really, and this fits my risk appetite. So you look at your own risk appetite and your own financial situation first lah, because I cannot offer personalized financial advice, so you decide for yourself. And anyway, this video is not sponsored lah, but I can share that my current SRS portfolio is with Poems in the Amani Prime USA Fund. This is what I believe in, this is what I invest in, but it doesn't mean that it is suitable for you because I really done my own research on what to invest in and I feel that this product fits my risk appetite. So if you're also considering where should you invest your SRS, I would recommend these 3 platforms: Endowers, Poems, or StashAway. Okay, they are all offering very competitive products and I'm not sponsored by them today. But I also want to make an announcement that I'm receiving a $20,000 of SRS funds next year in 2026 February because my insurance policy has matured. So this $20,000 of lump sum has to be invested again. Then I'll see which platform and which product that I will choose. Then I'll do an update video on it to invest my 20K of SRS funds by the first quarter of 2026, I'll make my decision. So for those of you who really don't know what you want to invest with your SRS funds, maybe you go and comment SRS plus one. I will do a follow-up video on what I choose to invest with my SRS, but doesn't mean it fits you. Okay, because I do my own analysis for myself only. So too long didn't really answer. If you really don't know whether you want to top up CPF or you want to top up your SRS, I would say if you know how to invest already and you understand your risk appetite, then go for SRS, especially if the platform and the product suits your risk appetite. You really know what you want in life, go for SRS. But if you really don't know, like me, blah blah 10 years ago, don't know what to invest with SRS one, then I would say you go CPF first. CPF has 4% guaranteed interest, right, in your SA or your MA, right? So you can then just accumulate it, build your own retirement funds, but take note of the limitations of CPF. Okay, both I also got invest on, so I have skin in game for both. So I hope this is considered an unbiased review lah. There is no right or wrong, it's just your risk preference. And I would say that if you are still considering right now, whether SRS or CPF, there are also other money things that you should do before the end of 2025. Because 2026 come, really all these things will expire. So check out all these items in this video right here.